Hello guys, glad to have you on board again today. I'm pretty sorry about the delay to post that video today, and I hope it's going to be shorter than usual because I don't have much time to spare for this, even though we have lots of things to talk about. Today we'll try covering, as usual, the cryptocurrency sector, trying to figure out what the hell's at play with Wall Street right now and the fact that capital might be about to bleed in the next following days. The danger is there, all the signals show a high level of risk-taking without necessarily what we need to cross the resistances, even though everyone is thinking that as the SPX historical highs are just barely at reachable hand distances, which means we're just 20 points away of the historical market top on the SPX, and though everyone think that this is where we're going to go. So we're going to see the risk-taking needing to go there. Is it reliable as a trading strategy, or do we need to get on the opposite side? We'll have to talk about this. But first we start with the cryptocurrency sector, and there is a lot going on in here. Capital is bleeding out there, and we're trying to figure out who's viable to buy, who's not. And I'll have multiple things to talk about today. Lots have been changing since yesterday, so we'll take the time necessary because these are important things. So first thing first, I'm going to start with the worst possibilities. I've been taking the loss on Ripple and IOTA. Those two, I'm out, and I don't want to be in again, meaning I'm never ever going to buy Ripple or IOTA again. Those are not from the strongest one. I've been playing with those, been putting a very tiny amount of money in those. For as you know, I've been transparent out there. I've been putting 500 euros on Ripple, which is literally barely nothing to me. So on the overall scenario, Ripple and IOTA just costed me approximately $100. Sorry, $150. So this is basically nothing to me. So I tried, failed, and the market just took my stop losses, and that's how it is. So I'm out on those two, and I'm not gonna buy those again for a simple condition. Is the fact that I was trying to figure out who it was strong enough to be bought into long run, and I figured out that we might have a pump before having the big dump that will put the stress out of the altcoins. Basically, I was wrong, as we're already stressing them right now, and from what I can see, a lot of those are breaking through supports and bleeding capital, having massive amount of capital, massive amount of volumes throughout supports, which means there's no buyers out there, and I don't want to buy those. I want strong support on assets to suggest that those who are in the capital are holding for a long-term trend. They have confidence that those things will stay the way they are. This is what I want to see, resilience. And what I don't see into Ripple and IOTA are those. If people were resilient, we wouldn't have that much volume released below the support, meaning that not that much of support, and not that much of leverage trading below support, which means if the guys are out, it's maybe not because they're not thinking that this is viable in the long term. It's just that those who've been buying this have been doing it with leverage. And that gives me a pretty decent clue about this. Generally, retail traders are using leverage. Institutional traders are not. They have the money necessary to invest, just like I do. I've never been putting a single leverage into trading cryptocurrencies. I'm a professional. Most of retail traders, having tiny amounts of capital, didn't have much choice to get reward than to using leverage. And this is what put them down the corner of being stopped out below that support, which gave me the information I was needing. Where are the institutional putting the money? And I think I have an answer, a possible answer today remains Bitcoin and Ethereum to me. They're not into Ripple, they're not into IOTA, otherwise they would have bought you out instantly, and they're not. They might be putting some money in there, but pretty much they're not already in there. As I think Ethereum and Bitcoin, they're already at play in those two, which means these are the two I want to buy. Doesn't mean I want to buy them right now. It's just that right now I have the information I was seeking for. These are the two I will definitely get to buy, but probably not right now. I'm still having half of my Ethereums, which means I still have like 10 Ethereums. It's literally nothing once again. Even if those were about to go to zero, I would just lose 3.5k, which is literally, once again, nothing regarding the amount of my capital. Might seem a lot to some of you guys. I mean, the guy is just telling you I'm ready to lose 3.5k. And okay, just see it regarding the rest of my capital. I generally don't like to talk in euros or in dollars because that can mean a lot different things to different people. This is why I'm using percentages. So take that as a percentage. To me, 3.5K is nearly nothing. Okay, it's below 4%. Which means if I'm out and if the entire Ethereum value were to go down to 0, I'll just take 4% loss. Okay, take that as a reliable risk management regarding what I have in terms of faith of current prices for Ethereum. So what I've been doing yesterday is taking 50% off the table for two reasons. First, I think I can buy lower prices. So taking 50% off the table will give me some cash to buy again later at better prices. I still leave 50% in for another reasons, for the fact that once again, remember that chaos theory is the fact that we could very well invalidate the bearish movements tomorrow, and I still would like to be in. I'll just put the money I've been putting out, I'll put it back in if we were ready to invalidate the bearish breakdowns tomorrow. And this could very well happen. I mean, at that point, we're just testing the resilience of those markets. Some have been failing that game, some are doing it pretty well. And if those are now showing strength, for sure, I'll put them money into those. I know what I want to buy, Bitcoin and Ethereum. The rest, I don't give a shit about those. Okay? They're not things to me anymore, at least not viable speculative vehicle to get into making potential long-term gains on those. So I've been putting the two I want to invest, Ethereum, Bitcoin. Now we're done with what I had to say regarding the cryptocurrencies. Regarding the technicals, just to set things straight, what we have in here, I'm just going to analyze those two. This one, I don't really give a shit about anymore. This one as well, and my altcoin index, fuck it, I don't give a shit. I'm just going to look at those two right now and find timings to get to invest on those two. I will look for two different things because you don't want to think those as a whole, you just take them as independent things to invest on. Different strategy will be put it on Bitcoin, and different strategy will be put it on Ethereum to me. The rest is nothing I care about anymore. I can be right, I can be wrong. This is not what I seek for. All I seek for is finding a few vehicles I want to get myself into for the next ride. And to me, all I care right now is Bitcoin, Ethereum, as long as the others haven't been showing signs of strength, which they're not currently. Okay? So until they prove me I'm wrong, I don't care about them. So Bitcoin, Ethereum. What prices I'll be ready to buy? First, we're going to analyze Bitcoin, and if you got my point, we're going to have to analyze Ethereum in a total unique way. There will be two different vehicles with two different strategies. So Bitcoins, obviously the context is pretty much different from Ethereum. What we have in here is a different pattern to me, is what I've been calling, and since yesterday you're aware of that pattern, this is what we call the washing machine or the momentum shakeout. We're out of an overbought momentum that has been lasting in this ceiling value for a long time. I mean, we've been setting 1, 2, 3, 4, 5, 6 days into overbought momentum at ceiling values after an overbought pattern. So we've been getting above overbought structure for 6 days before reversing that trend in a brutal way as we went from bullish to bearish in a very tiny market channel, a pricing channel. And when we do this, tiny, very narrow channel heading slowly but steady to the downside. This is what I call the washing machine. It means generally you have to respect a few things to be in that specific market situation. You need to have that tiny channel, and you need to have a momentum that never ever retraces to zero value or doesn't stand there for long. So it's probably not a washing machine going on in the 2-hour chart time frame, but probably on the 4-hour chart, you'll never see the momentum pulling back to zero value. Anytime it goes to zero, if it sells off. So we're going to do it just for the sake of the purposes in here. So you're going to teach you that pattern. This is exactly it. Okay, we never ever managed to retrace above zero value. We maintain the momentum being always negative. Every time we go to positive value, it's sold again. This is the washing machine, as the price are moving into a tiny narrow channel, and obviously the pattern is still at play. We try to get above zero and we failed it, which means we're still inside that pattern, and that pattern will last as long as we are below zero, which means this pattern ends when we get the momentum to stay below zero. Whenever we'll do this, you'll have the signal that the Bitcoin terminated that bearish washing machine pattern. Okay? Now if we go back to the daily chart, what we have in here, as I said, I think is the dominant pattern. Washing machine is a shorter term pattern in 4-hour chart time frame, but the major pattern means first we should exit from the washing machine, kind of finding some support in there and then exiting the bearish trend channel, finding bullish momentum in 4-hour chart, and then we'll get out of the major pattern, which is the momentum shakeout, which is just we go up, we fuck you up, and then we're going to fuck you up on the other opposite side once again, which means we're probably going to have to last that support or just go slightly below to trigger stop losses. But I think this is the area in which the pattern will terminate. So now I can say that I think Bitcoin is buyable near the 6,000s. It's a dangerous area once again, but I think this time if we find some support and bullish support in there, we'll be ready to break down resistances. Okay, so I'm just changing my mind. You know how it is. I'm a trader. I generally don't change my mind too often, but I'm not stupid anyway, which means when things suggest I might changing my scenarios, I do change them. And I think right now Bitcoin has been showing some pretty damn strength, and if it manages to survive and create a support above the 6,000s, once again, I think this one is something I'll be ready to buy and hold. Not with all my capital, but I think I'm going to put 50% in there, which means probably going to buy approximately 5,000 to 6,000 of Bitcoin with cash. And a buy and hold scenario. I mean, those Bitcoins, I will never ever care about those anymore. They'll be into a ledger wallet, which will be there and stored forever. And then either they're worth zero and I'll lose them entirely, or they will gain and they will price the double, which means if I enter in here at 6,400, I won't touch them until they double the price. So it means whenever we get to 12,000 approximately, this is where I'll start taking partial profits just to secure the trades. I'll take 50% off the table and just let the 50% left into the ledger wallet forever, until I may need them someday to just buy shit with them. If Bitcoin is about to be the next global worldwide currency, then I want to have those. But until then, I'll keep on using fiat money. That's how it is. Bitcoin will just be a safe wallet. I will put money in there just in case we went to go down to using cryptocurrencies as a standard. And this is nothing that you want to be sure of. I've always been clear about my strategy in here. There is a risk, tiny risk, to see the cryptocurrency taking over the fiat currencies. And for now, I don't think this is viable. All I think is that I want to be prepared for that risk and having some cryptocurrencies just in case. All right, so I'll be buying those only if we get to exit that bearish washing machine. And for now, I'm just waiting patiently to get that pattern terminated. Regarding the Ethereum, different strategy in here. We're working around the bearish support, the bullish support. The question is whether we'll hold it or not. We've got a ceiling bearish momentum, which means impossible to buy right now. This is the reason why I've been taking 50% off the table. Now I need to have at least a candlestick pattern. I want to see the market holding that support. So we're going to pull out the momentum analysis, sorry, the 2-hour chart analysis, and we're working as a potential support right now. We've got volume support through time. Problem is we're heading to that support with very dangerous momentum. Sine wave is nearly detecting cycles pullback as the price keeps on moving bearish. So I have pretty much less confidence about the fact that this could be a support. The only solution in there will be to find some very huge buying volume in there to just invalidate that breakout and get to restore the prices below or above that support in the next 2 or 3 days. or eventually just tomorrow. All I want is for us not to spend too much time in there and finding some strong bullish volume to reactivate and get above that level again in less than 2 days. If this is what's about to happen, let's say before the end of that week, all I want is for us not to close the week below those lows. I want to see a weekly close right here with a lower shadow candle. If that's what's about to happen, I mean, this is the previous week's candle. We've made a bearish week candle, and we decided to break down that candle. Only reason for me to invalidate that bearish trend is to get back closing inside the previous week's range. So we need to close on Sunday in here, otherwise we'll have to trigger lower levels, which means I might need eventually to take some more money off the table from Ethereum temporarily, but I'll be certainly buying this one. You know that for sure. As long as I haven't been proven wrong, and if it happens, I'll tell you. For now, my choice remains Bitcoin and Ethereum only. All right? So moving on, I've been telling you everything I needed. These are the lowest reports. I suggest you put the video at, on 180 pixels, so you 1080 pixels, so you'll get the maximum resolution. Otherwise, I'm just going to zoom them out into the top, bottom left corner. And these are all the levels. The red levels are levels to break down, which means if we go to those levels, we'll trigger stop losses, which means we'll get to the next blue area, which is a lot lower. If we break down this one, there's no support in between. This one is obviously another breakdown level, which leaves us to that area, which is a technical price in Fibonacci, which means this is where I think potential next buying area is interesting. So if we're getting there, I'm triggering additional losses on Ethereum, taking another 50% off the table, which means I'll have 25% remaining just in case. But I'll be ready to wait for those prices to eventually, upon signal only, buy again. But I need to have signals on Ethereum. I think Bitcoin is not going to give a single signal. It's a washing machine pattern, which means it's a momentum pattern, but not sine wave. Sine wave is obviously lost into those patterns, so don't wait to have a double bullish signal in the Bitcoins. You won't have those. So only look for a momentum pattern, which is the momentum in 4-hour time frame leading into positive value and the price exiting from the trend channel. These are the only conditions you can be sure that the washing machine pattern terminated. So don't buy aggressively trying to buy support. It's not going to work. Just wait for the pattern to terminate. Washing machine is a very dangerous pattern. You don't want to be over leveraged in there because the market is just going to ride horizontally, break down, ride horizontally, break down, ride horizontally, break down, and remaining into that channel as long as it has available stop losses to trigger. So if you're getting in there with leverage, you're obviously going to be triggered among the other stop losses. If you remain low leverage, you can just patiently wait for that pattern to terminate. And after chasing all the stop losses, the market generally first returns to the mean and then gets to eventually reverse the trend. All right? So that's it for the cryptocurrencies. Now moving on to the big markets. I've been selling that damn shit of NASDAQ. Now we'll see if I was right or wrong. This is about to be decided today. So either we're going to have a pretty damn red day today, or once again, Wall Street's going to buy the lows. If Wall Street is there to buy the dip, which means we have a support in here, we're obviously going to test that support today. This is a binary choice. Either we fail in there, make a daily bearish candle close today to just fuck up the buyer's scenario of reaching out market top and making new historical highs and things like that. So it's really binary. Either we fuck them up today, install a bearish momentum and a bearish trend with a violent and brutal bearish reversal out of that seller's area that we've been testing. I had that plan. That plan was, in here, I'm shorting upon signal only. I didn't have anything such a signal, so I've been waiting for the selling entry price I've been highlighting before. The price I'll be ready to take, eyes closed, so I took that price. Now I'm waiting patiently to see if it's going to react or not. If I'm wrong, I'm going to be stopped out in here. If I'm right, I'm going to take a fucking huge gain. All right? Once again, right, wrong is just a matter of stupid traders. Smart traders take risks, and they're not trying to be right or wrong. They're just trying to manage their risks the best they can. So still trying to figure out what the hell's at play right now. We have another very dangerous scenario we need to talk about right now, the one that is probably about to take my stop loss and the maximum loss scenario. So this is huge thing in here. I'm probably going to take a 3 to 4% loss in here on the GBP/USD. As you know, I've been trying to survive on this one for a long time ago. I mean, I'm holding this thing for let me be precise in here. First call I've been making on GBP USD was up here. Then taking partial losses, buying again, taking partial losses, buying again in here. I mean, right now I have no choice but to trigger the stop loss at some point. So I'm going to have to take that loss. I don't like that. I know the bottom is probably a lot, is probably nearer than expected. I'm probably going to be stopped down by the bottom. But right now, as I don't know, as I'm in a maximum stop loss, I'll probably have to get out. So I don't necessarily know when the maximum loss is, but I know I'm pretty damn close to it. I don't know if I can handle this, to be honest. I'll have to calculate this, but now I'm going to have to put a stop loss at the maximum loss. If I can handle that support, I'll be fucking happy to be able to do it, but I'm not necessarily sure about it. So we'll see about that tomorrow, but probably tomorrow I'll have to tell you that I've been stopped out in here and probably right at the bottom. So if that's the case, then I'll just take the loss. Been taking too much risks. Right now I cannot just take 50% off the table. My average prices are right here, so taking 50% off is nothing reliable. It's not possible anymore. It's just right now the maximum stop loss is there. If it has to be triggered, that's how it is. I'm going to give that loss, means I've been speculating too aggressively. The market took me out. That's the game. I'm going to give the 3 to 5% to 4% loss. I don't want to go further than that, just in case the market is just collapsing. I don't want to buy and hold. I mean, that's not how it works. It was a speculative scenario. I took too much risk. I'm out. That's binary situation in here. But of course, I still have that bullish bias on that market, which means I won't be right with the speculative timing, and I've been too wrong, which means I have to get out. And at some point, I'm just going to wait for the confirmation, which means anytime we will exit this, I'll be ready to buy at pullback with low leverage on some kind of trend trading scenario. So anticipation, probably about to be wrong-footed in here, and I'll have to give a stop loss. You know how it is. I'm talking to you about the gains. I'm also talking to you about the loss. I'm not hiding anything in there. That's not how we do things right here. So GBP USD, wrong-footed scenario, probably a maximum loss to come forward in there. We've got problem with the gold as well. Probably have to trigger a maximum stop loss on this one as well at some point. I'm not ready to take invalidation in here, so I might be triggered once again, bottomly on the gold. And GBP USD, even though I have very strong conviction being bullish on that market, but I just can't stand it anymore. I mean, good job for the bears. You've been fucking me up for way too long. I'm gonna take some more money in the end. I know about it. I know. I'm giving you the speculative stop losses just to be not that kind of stupid guys who is holding on to his losses because he's right. I don't know. The market can just be bearish, and if that's the case, then I don't want to be buying holding to make a bigger loss in the end. I'm taking maximum loss today. It's a pretty damn red day for the account. I'm not hiding it. Today I might be closing the day at minus 8% on the account. If I get stopped out, either both gold and GBP USD, that will be a bleed out on my capital. I will suffer from it, but just to set things straight, if you want to know how much I'm gaining right now regarding EURJPY, you just take the market top and you multiply the gains by 4, and you know that in the end, today is a pretty damn red day, but their losses are covered by the gains. I mean, you just take the scenarios I have money into, AUDNZD, EURJPY, these two are working pretty damn fine, and I have leverage on those. These are not speculative gains, these are trend fucking reinforced gains with leverage, okay? So once again, today is going to be a back day, obviously will be. I'm not going to be able to terminate with a blue account today. Going to be red for sure if the stop losses are triggered. At that point, it might be just a question of time, just a matter of time. I'm probably going to be stopped out today. From what I can see, the dynamic is just right here. Wall Street wants to have its market stop, and they're going to try selling gold today and just fucking up the GBP to get some money. At short term, these scenarios are really short-sighted. It's really getting the money at short term, getting to historical highs to trigger stop losses, and then just let go the movements in Wall Street to grinding higher and higher every day to get to the stop losses. And if they manage to reach out to the historical highs, we'll just have a fucking low VIX forever. I mean, it's like no one is fearing anything because the market is getting to historical highs, and then this is blue sky ahead for another quarter. That's basically it. That's what Street is trying to do, to get to the historical highs and trying to install some kind of a bearish wrecking trend. We're wrecking the bearish, we're just taking all their stop losses at once, and we're just going to stay there for a while before we just crack entirely the market. Okay, so to me the scenario was a binary choice. Either we fuck up in here today and we just damn trap the bulls and making a pretty damn nasty bearish candle today. Option number 2, we get to the historical highs. And then at that point, the VIX is going to be stupidly pricing lower levels than 12 for no reasons. Once again, it's nothing rational in here. It's just pure price manipulation. It's not going to end well, not to say it's going to end very bad in the end, and we're going to expect a market crash. So this option probably very less possible right now unless today we're making a bearish engulfing pattern. So this one probably going to have to be deleted. So this leaves us with the only 2 scenarios, and they both have the same end. Either a bearish market catalyst is just fucking up entirely all the scenarios in Wall Street, and we're falling apart, no one will know why, and everyone will trigger the stop losses at once. Option number 2, which is get there, fuck up for 1 additional quarter, eventually 1.5 quarter, but right in here, from a timing that will start from October to December, I'll get to trade the big short. Which means this one, I'm not going to take 10% loss, a 10% drop. I'm going to take a damn 40% drop out of the US equities. So this is obviously not the same trade than the one I've been trading right now. If the market is falling, I'm ready to take at least partial gains on the bottom of the range in here to secure the trade and see if things deteriorate later to eventually switch to a bear market. But as long as I don't see the profits heading downward and things like that, I won't switch to bear market. It's just a speculative trade at that point. But if we go there, making new historical highs, this will be the big short forever. Not forever, once again. The market will be bullish after being bearish, and the trend, the long-term trends will always be bullish on markets, because markets are and will forever be bullish. That's how it is. This is because of inflation, and as long as we do trade with inflated money, we'll get to make higher valuation forever, which means the trend will forever be bullish in asset classes like the stock market. All right, so I'm not fighting this to say this is abnormal, we should fuck up the economy and kill the capitalism. I don't think it that way. All I say is that right now capitalism is reaching the end of a cycle, and we'll probably have to search for selling entries. And I'm going to show you something that you might be interested in too. This is what we have. I'm just going to show you this. So this is in French, but I'm going to translate it for you. It's an oral document saying net incomes regarding the last 6 months. So this is corporate buybacks, okay? This is institutional trading. And this is retail trading, this is ETF trading, and this is rest of the world trading, so emerging markets. Okay? So from what you can see, who's the damn buying the US market? This is US stock market. This is the damn corporates buying their fucking shares. So this is what we call artificial movements. The smart money institutionals are damn doing what I've said for months. They're taking money off the table. And those who will make the trends are these ones. If they are taking the money out, leaves us 2 options. Either we'll sell enough money, they will stop, which means no one's going to sell anymore, and share buybacks plus retail traders damn buying will lead us to have a pretty damn bubble stock market. Otherwise, ETFs are bearish, and bearish smart money believes that at some point they're going to take over the corporate buybacks. The corporates won't have the cash necessary to keep on going the share buybacks, and everything just falling apart. Okay, because we'll have high volume demand to sell, low volume stupid demand to buy, no longer this bullish volume to support an equilibrium and get this on a tiny equilibrium. And the fact that rest of the world money will stop flowing into US market because of a rising dollar. Okay, so these are the 2 scenarios of right now. Corporate buyback to support the pricings, volatility sellers to avoid getting into breaking supports, stupid buyers of equities on the retail traders, ETFs selling because who the hell is buying ETF right now? Retail traders. And who is selling them? Institutional traders. So why are the ETF volume negative? Because some people are buying bearish ETFs. And these guys are some smart money trading without trading throughout ETFs, and then we got rest of the world buying because of that damn scenario of dollar being the strongest. And as I said, that scenario is wrong. The dollar is bearish in the long-term run, which means at some point it's going to reverse. And everyone thinking that the dollar is going to be the safe haven of that crisis, upcoming crisis, is just probably wrong to me, which leaves that money considered this as a supply. That supply is not going to last. This one is not going to last either. This one probably going to last a little bit longer. This one doesn't even care about. That's the retail traders who don't give a shit about their volume. They're so negligible that if the market's going down, even if they're buying, they will just take even bigger losses. The ETF is pretty much a damn amount, and we're going to make a video about this pretty soon. I have a dangerous scenario regarding ETF, and that's actually showing me what I've been thinking. ETF volume is pulling out, and that's not sign of good things to be coming forward. So we'll make a video about ETF specifically. That's a very big, dangerous kind of asset in there, with having a parabolic systematic Ponzi scheme system that is going to obviously fall apart. It's just a matter of time, and we're going to try to figure out some possible timings to do it. Once again, highly speculative scenario. You can never predict timing. You can just assess a possible timing, take a decent risk reward, and just let go with the market, who decides if you're right or wrong. Okay, so that's it. I'm probably out on everything I had to tell you today. So watch closely for the gold and the GBP/USD. It's probably going to be the vehicle that Wall Street might be able to take down to get the free money to buy some stocks today if they obviously want to get to historical highs. The problem is that USD CNH is dangerous to me. We'll still talk about this one. This was yesterday's new, as we broke the lows today, okay? But we're retracing, means that this leaves me with two options. Generally, I would sell that eyes closed, really eyes closed. To me, this is clearly very great price to put more money into. I said tomorrow, reaching validation. So normally when we get to validation, I generally apply my strategy, which is reinforcing on any available pullback. So we clearly see ABC pullback. I should be putting some more money in there. I'm just not doing because of a single reason. The damn Wall Street guys might be still trying to fuck up with me. So I don't want to put additional money into USD CNH. Instead, I'm putting the validation in here. So I'm just going to take that trade if we go down there once again. Otherwise, I'm not reinforcing. I'm just fearing that those stupid guys will just try to take my money once again. If I put additional money in there, meaning adding some risk to the underlying positions with me, they might be ready to fish me and take me out of the sea just because I've been taking too much leverage, too much danger, too much risk. So I'd rather like to wait and make sure they're just being about to be fucked up regarding USD CNH, which means China is going to take over that battle. And I said that for a long time ago. I told you that the Chinese will probably take over that stupid war, and that even though US think that they will forever be the winner of a potential trade war, I always been clear on this. From a trading perspective, they're going to lose, and they don't know it yet, which means there's money to do out there because the market is about to be wrong-footed. But now I want to see this happening. I want to see the damn stock market in the US falling apart, as well as the USD CNH. If I do see that, I'm going to make a lot of money. If I don't see that, I'm going to lose a little money. That's how it is. That's how trading works. Once again, I'm not trying to be some kind of who's right or wrong, playing who's got the bigger dick. I don't give a shit about this. All I care about is risk management, and I think in here we've got pretty decent risk to trade downside. If I'm wrong, then I'm wrong. If I'm right, I'm going to take huge money. So that being said, I'm going to wish you guys a good day. We're going to make a special one about Tesla some days. Obviously, there's going to be a pretty damn scenario out there. Just to sum this up in a few words, lots of emotional trading, lots of dumb things out there. So probably a lot of money to take profits out of, but not necessarily right now. I've been taking a short entry on Tesla, but I've just been taking like 8,000 euros of short entries out there just to, once again, dip a toe in the water, feeling the temperature, and see how it goes. I mean, anyway, this thing is going to end. It's not going to end well to me. It's going to end very bad. Not to be pessimistic in here. It's just that I'm going to give you the arguments in a separate video, just to not make this one an hour long. So I'm going to take the questions right now and move on. You pinned it. This was the beginning of a massive flash crash that basically no one saw coming. BTC market in O's went offline in the crash, and there was no way to buy it unless you had orders in. Okay, so that's basically it. We're out of big danger regarding the cryptocurrency sector. We're starting to have market pulling out, and this is dangerous. So we're right in the expected scenario, which means we're putting stress on the cryptocurrency sector, probably the final stress test, that the one that will have to buy the survivors. And I strongly think Bitcoin, Ethereum are showing the biggest odds, the strongest odds to be those two biggest survivors. I'm anxiously waiting on a daily basis, like if it was a new episode of Game of Thrones. Yes, okay. First of all, what I'm saying out there just is regarding what I am doing. So please don't be into that thing that you are getting in here every day to get your daily dose of Game of Thrones. This is not how it goes. I can very well be wrong. So if your entire investment strategy is based on what I say on a day-to-day basis, this is really dangerous, because that means what I'll be doing as a heavy, high-level speculator, you would do it with leverage, and I don't allow that. Unless you're doing with low leverage, and if you take the loss, once again, you play the way you want to. You just don't put the damn lack of confidence you have into your trading into myself. Okay, because if this ends up being a loss and me being wrong, I don't want you to be mad at me. Okay, I'm just doing my job in here, which is speculating and not massively, magically forecasting the future. I don't damn know about the future. All I know is that this is interesting right now as a scenario to get money out of speculative scenario. Okay, so just don't make that mistake. I'm a damn speculator, nothing close to a magician, and if you're just following me blindly, this is dangerous, all right? And if it ends up being a loss, you'll be the only one responsible for that loss. So don't come after me to blame me. I'm doing this speculatively, certainly not going to put all my money in there, and so should you, okay? If you want to copy me the way I'm doing it. I don't give a shit if you want to do the same as I do, but you have to respect all the rules, which means if you're putting all your money into those assets, you're taking a risk I'm not taking. As I said, I'm probably going to take $10,000 to $15,000 out of probably, including my real estate and things like that. Maybe I might be approximately to $500,000. So, which means $10,000 out of $500,000. Do you really think that's a big amount of my capital? No, it isn't. So, think smart. If you want to copy, do it with a very slow percentage of your assets if you want to do it that way. So how do you pick stocks to trade? Are there certain things you should avoid when choosing what to trade? Yes, I do want to have a liquid assets, which means trading illiquid shares, independent shares that are just exchanging, let's say, less than $1 million a day. These are the things I don't really trade unless I have a good reason to do it. But generally what you do with those trades is that you have insider information or things like that. Otherwise, you just don't trade in. Or you trade them very long-term for specific reasons. But I only trade liquid assets because I want to be speculating at what others will do before they do. That's my job. Thinking first, acting before others to have a better risk-reward ratio. So, dollar will strengthen while a collapse happened. Look at past history, look at no, fuck it, it's not going to happen. That's not what I think. Once again, I'm no future telling. I don't know what the future will be. All I'm saying in here is that you can have a scenario different than I do. I have a scenario. All I care about is right now I'm having a decent risk-reward ratio to speculate against the dollar and for the gold. If I'm wrong, I'm going to take tiny loss. If I'm right, I'm going to take fucking huge gains. And that's, once again, all I care about. The more you try to convince me I'm wrong, the less I will care about. Doesn't mean you will be wrong. Just means I don't give a shit about right and wrong. I'm trying to make you guys understand that speculation is a damn job. It's not easy to understand. It's not suitable for everyone. Those who have an investor psychology will not understand that. It's basically you will buy things because you think they will get better in the end. I don't give a damn about this. Speculation is nothing close to investment. I do have an investment profile as well, but I told you about that. This is not the time to invest. We'll talk about investment strategy when the time will come, and that's probably not until we get to 2 years ahead from now, and we need to have a recession first. All right? You caught pretty badly on shorting Tesla, I don't think. It's pretty crazy now, and that's the reason why I think I'm going to make a damn pretty fucking money out of there. It's just needing some patience. So I've been, as I said, dip to toe right now. I'm just waiting patiently. And we'll see about that. I mean, I think in the end I'm going to take the money. Otherwise I wouldn't trade. It's just a matter of patience right now. I've been dipping a toe without stop loss, which means the price can go to $250, $270, $300. They'll give a shit. I mean, they're not going to take my money. I don't put stop loss and don't trade with leverage. So they can go as high as they can. I think this is going to be a brutal ending for this, and it's not going to be pretty. So I think that we're going to $180. So this is my target. I'm going to give all the arguments I have regarding this in a separate video, just to don't make this one an hour long. So I suggest, if you want to know more about my scenario, just watch out for that video. It's going to come up probably tomorrow or today if I have the time to record it. So 2 other videos are coming pretty soon. The first one is regarding this. We got the second one regarding the ETFs. And of course, we're going to cover up those 2 pretty soon. So goodbye, guys, and I hope you have a good day and good trades. Trade safely. The current times are really, really dangerous, high volatile, danger. So this is not the moment to make money. It's the moment to try not losing, eventually making tiny gains, but don't go into leverage trading right now. It's just going to push you right down the corner. And a market that doesn't really know what to do, it's just stress testing the different scenarios. And at that point, waiting is the best option for those who are pretty much beginners or lacking of confidence. You better not get into there, or you're just going to switch scenario from bullish to bearish to bullish to bearish, and you're going to be wrecked in the end. So just basically wait is the only option if you're lacking confidence. If you want to get yourself into practicing trading, highly speculative trading, do it, but with the lowest possible leverage. Just put literally no money, or money you don't really care about that couldn't go to zero without flushing away your investment capacities. Okay, the real investment, the good timing to get to use your money into an investment strategy is still not yet. Whenever the time will come, you'll be the first to know. Whenever I think the time will come, once again, no magician, don't know. I will be speculative again on the investment timing, but right now I still think this is not the time. Bye, guys, and wish you good trades.